So the three questions we want to ask, take a look at these two asset lists. They are virtually the same, except for in asset list one, you've got cash of 500,000, which is 40% of the total. And the asset list number two shows just vested stock of the same amount of 500,000 or 40%. So the question I want to ask you, which really helps frame how you feel about your company stock, is if you had list one, you had cash instead of list two, where you have just vested company stock, would you use the cash to buy your company stock? Think about that question for a minute. Okay. So when considering that, look at question two. So, okay, you have 500,000. How much would you buy? Would you buy the full 500,000 or would you buy something less? And then maybe the most important question here is why? Why would you do what you think you should do? What you're thinking you should do? Would you buy? Would you buy some or all? Would you put it into something else? The reason is from a tax perspective, asset list number one and asset list number two are exactly the same. When your company shares RSUs vest, you owe income tax on those. And it's just as if you had just bought them. So if you turn around and sell them at that point, you would have no additional tax. You wouldn't be incurring any additional tax. So you can turn it into cash immediately and diversify it. But a lot of people don't do that. They don't understand the tax implications. So to hold your RSUs, choosing to do that is the same as choosing to buy them at that moment. Maybe you want to buy them all, maybe you don't. Okay, remember, taxes due at vesting, capital gains and loss going forward from that are based on the vesting price as if you had just sold it. So there's really no inherent benefit tax-wise from holding vested RSUs. This is a mistake a lot of people make, especially with those who've had stock options in